Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is approaching a quite strong level of previous monthly support, which is now turned resistance. In fact, what we can notice is that exactly at this level, the market had found support, creating this rejection to the upside when it printed this green candle. After that, the market broke below the zone. So this previous support was turned resistance here. And what we could expect in a situation like this is for the market to go and test this previous support, which is now turned resistance, and then to respect it as resistance and create a rejection to the downside. What we can also notice is that from a pattern standpoint, we can notice how we actually have an impulse and the start of this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse leg. And if we do that, we can see here how we have both the 50% and 0.618 Fibonacci retracements, which are lining up precisely with this previous support and resistance, creating confluence of resistance inside of this level, inside of which, if the market will actually reach it, we could expect institutions to be adding more shorts. That is something we will be speaking about later on, which at that point would further increase the probabilities of a potential rejection to the downside. So by looking at this market from a monthly perspective, what we could expect is a bit more bullish price action in the short term and then more longer term bearish continuation. Dropping that on the weekly time frame, what do we see? Now, from a weekly standpoint, we can see how the market had created this overextended M pattern. Now, in general, after the creation of an overextended M pattern, what you would expect is for the market to create first a rejection to the upside and then the continuation lower. So also here on the weekly time frame, if we want to measure this correction after this impulse, we have to take our Fibonacci from the high to the low of the impulse leg. And this shows us here on the weekly time frame how we have also here the 50% and 0.618 Fibonacci retracements lining up exactly inside of this area, which we could in fact expect this market to correct to and then to get rejected to the downside away from this level. So also the weekly time frame is quite clear. Dropping down on the daily, this is where things get quite interesting. Now, first of all, I did speak about gold when the market was here. I explained all the reasons for which from here we could expect this rejection to the upside. And in fact, that is exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, in creating this move to the upside, the market is now also creating new structure. In fact, if we follow the movement, we can see an impulse to the downside, a correction, then the market tried going lower with this red candle, and now it is continuing higher. So in creating this move to the upside, the market from a daily perspective is creating a W formation. And after the creation of a W, what we could expect is a rejection lower for the completion of the W formation at the neckline, which is essentially the previous resistance turned support. So in this case, it would be the high of this red candle. So here on the daily time frame, we could expect this market to create a bit more bullish continuation to really complete the W, but then we expect a move lower for the completion of the pattern at this previous daily resistance turn support. Now remember that this aligns perfectly with what we have already identified from a monthly and weekly standpoint, because we have already identified on the monthly and weekly that we would like to see a bit more bullish price action and then a rejection to the downside, which also here on the daily time frame would create the W formation and then complete it if that is actually the movement that the market creates. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for gold, we can see how with the last reports, net positions have been decreasing. We went from having 135k net positions all the way down to now only 91k net positions, with 17,000 shorts added with the last report and 7,100 longs getting closed, reaching 137k shorts compared to 228k longs, showing how institutions have been moving to the bearish side of gold during this move to the upside. This means that if we will see a bit more bullish continuation into the resistance levels that we have identified on the monthly and weekly time frames, at that point we would have very good probabilities of seeing even more institutional shorting, which at that point would further increase the probabilities of a potential move lower, completing the daily W formation at this neckline area, which is essentially this red candle. So previous daily resistance now turned support. So if we will have the creation of this daily W formation, how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the completion of this daily W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. So I really suggest to go and check it out, and directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.